Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on oil and USO, daily, weekly, shorter term time frame. So yesterday's video, we had the reaction to the inventory report and the breakout, normal healthy consolidation after that. And after the video, the bulls continued to the upside, higher lows and higher highs. Every dip, we see nice lower wicks with bulls buying the dip, maintaining the higher low pattern, and making their way slowly back with a really nice recovery at this point. So we can see that recovery on the daily time frame. Bullish reversal candlestick confirmed, and we are maintaining higher lows even though we broke the strongest higher low pattern. Overall, we do still have a bunch of supports, and this is pretty much as ideal a reaction the bulls could have hoped for as we're making our way back towards that looming $54 resistance. So what stands out to me, and if you've been watching these videos for a while, I do occasionally put my long-term view in here for oil, and I am bullish long-term oil because, or let's say midterm, in terms of the next, let's say 6 months or so, but either way, it's the lower wicks showing the bulls loading. And look at whenever we dip to the $50, $51 range, bulls are buying the dip, buying the dip, buying the dip, lower wicks, nice, strong loading. And this is me seeing that the bulls are getting ready for a break over $54 and a continuation of this bull move. And that's what I fully anticipate to happen. Don't know when it's going to happen, but this is exactly the kind of action that the bulls want to see on every pullback with it getting bought up. And it's also nice to have a very, very clear resistance level at $54. So we know when the bulls are back in control, when we can close above that level on the daily time frame and be looking back up at $55.21, the highest price we've seen recently. So a nice reaction by the bulls. Even if we don't make it all the way to $54 on this bounce, we'll look to form a higher low compared to $51.20, the low of this pullback, and then we'll look to head back up towards $54 next week. So that is a good reaction for the bulls, and USO is seeing that bounce play out, but we need to see a break of that resistance up at 1163, 1162, multiple tops up at those levels, and bouncing off of the 100 and 200 day moving average supports. A little bit of nice follow through, but not going to see significant follow through until we break those levels. Weekly time frame, nice back test and hold in the middle Bollinger Band of 1116. Lower wick showing the bulls buying the dip, and that's what we've seen 3 of the past 5 weeks. Every red week we see, we've got a lower wick with bulls buying the dip. So we'll keep an eye on oil as always. We'll check back in tomorrow to see how we wrap up the week. All about 54 resistance and all about 51.20 support if you're looking more longer term on the daily chart. I appreciate you watching. See you tomorrow.